Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for showing up for another episode of Zen and the Art of Real Estate Investing. My guest today is Peter Neill of GSP REI. What do? They acquire, develop, and redevelop single-family homes in growing areas with an undersupply of workforce and affordable housing. We go through Peter's journey. I can't wait for you to hear it right now. This is episode 255 of Zen and the Art of Real Estate Investing with my guest, Peter Neill. Peter is the co-founder and partner of GSP REI. I bet you know what REI stands for. It's real estate investment. He started his career working in marketing and sales at a distressed mortgage investment company, transferred that into investor relations and raising private capital. And now we're all the way full circle. Peter, welcome to the show.
Jonathan, it's great to be here, man. I appreciate you having me.
Yeah, I'm always excited to talk capital, raising capital, and that's where I want to start, and then we'll get to your background and how you really got into real estate. But what is the hardest thing about raising capital when you're new to it? Because that's what I think a lot of people as new investors, they look at one day, I may want to raise capital, but I'm scared.
Sure. Yeah, well, for me, I started raising capital at a firm. I was kind of right-hand man to the CEO, and he had a really great reputation. He did a lot on Bigger Pockets, wrote a book for Bigger Pockets. So that created an illusion, of maybe it being easier than it was. When I left and I started my own company and started raising capital for my own funds, what was different and what was like that was really like a punch in the face was the marketing side of the business.
Yeah.
I mean, so sales is one thing, you know what I mean? Like being able to talk to investors, build rapport, connect with them, find alignments and interest and values and investment goals and things like that. That's one thing, and some people I think are better at it than others, are more natural at it than others. But the marketing is a whole nother piece. You know what I mean? Like back then the phone just rang.
Yeah.
And I kind of knew how it happened, because he wrote the books and he was on Bigger Pockets all day, every day. And, went to a lot of events and just years of compounding the reputation and the brand and all that kind of stuff. And then starting on my own, having to do the sales and the marketing side of the business. I mean, that was the thing. I mean, that's a lot. You know what I mean? That's having to market and stand out in this environment. Like the other thing, too, was doing this for 10 years now. The capital raising game has changed dramatically.
Yeah.
When I first started, I tell this story all the time. So I went to Temple University in the city of Philadelphia. They did a program. I think they still do it today. I think I still get their emails. It's called Blackstone Launchpad. It's like a incubator, for ideas and things like that. So I had been in the space for a little bit. And I think Fundrise and maybe some of those other, maybe Realty Shares, I think was big back then. You know what I mean? So they were around, but it wasn't like it is today. You know what I mean? Like, so I went there and I said, I think it would be great. I think 506 Funds, Matt Burke's company back then, was around and was popular. And I went there and I thought, man, I think I could create this website, where we host deals on it and we do all the, webinars and stuff. And, people will make money through the syndicators that are posting the deals on there, through investors and kind of like a club and all, and sponsorships and all that stuff. And the guy, I think he was from Blackstone somehow, he had said to me, that is the dumbest idea I've ever heard in my life. I mean, he's like, that's not how this business gets done. I mean, this is a face-to-face business, handshake business. Nobody gives money to people that they met on a website or online or something like that. And 10 years later, my God, could he not have been any more wrong?
But maybe he was just hopeful because none of us really wanted it to be the way that it is because it's tricking a lot of people, right?
Sure.
But to go back on your story, the person that you learned that from, it was Dave Van Horn, right, of
Yes.
PPR.
Exactly.
And that's interesting, though, because I was thinking as I was asking you the first question, reputation plays a big role in asking for the capital. So then when you go to do it on your own and you're still getting started, you're kind of bridging the relationships that you've built with other people, but now it's on your own shoulders. And that's where I think people take a good note from you. Get some experience with someone else who has a higher reputational capacity than
100%.
you, so you can work on that and then start to build your own along the way, because you bring yours with you, but it's still different when you go out and ask for your own, right?
Oh, 100%, and then the team behind it is different and all, you know what I mean? Because there were other guys at PPR at that time that had left and did their own thing and raised some money kind of off of that, what's the word? I'm like, maybe reciprocal reputation or something.
Right,
you know
right.
I mean?
It's almost like,
rubs off on you,
the headwinds or tailwinds, but that could only be good for one deal, if you don't keep it up.
And he didn't keep it up. I mean, the person I have in mind, he didn't. And, so it only helps to a certain point, and then you have to show your ability to execute, and then your team, real estate's a team sport, you know what I mean? So it's just like, I always say that's capital acquisitions and execution. I try to, as a fundraiser, another kind of like important tip is you got to make sure that you're listening to the person and that you understand where they're coming from. So a lot of times, like when you're in this business every day, you tend to talk a lot of jargon, and you can go very high level on stuff and IRR and cash yield and, this and that, and you name it. There's so many different slogans and sayings and abbreviations and things like that. But the people you're talking to, a lot of times they're not into that. You know what I mean? Like I can remember when I got my real estate license, there was a guy who was teaching the course and he said, I had this listing, I got this listing and it was me and the other person who was like the biggest realtor in town. And he was like, I couldn't believe I won this listing. And I said to them, how did I get this? Like, why did you choose me? And they said, well, you told me that you were going to put, my house on this multiple listing service where all these people were going to see it, everybody in town and all. The other guy told me he's putting it on MLS. I don't even know what that is. So like they didn't explain what the MLS was. You know what I mean? They just assume everybody knows what the MLS is. I mean, and it's the same thing with this business as well. You have to meet people where they're at, and you do that by asking really good questions and that kind of thing. But yeah, just to go off on a tangent there, I don't know how that came up, but I
love a tangent. Well, I was thinking though about what the guy from Blackstone said, because as I was joking when I first heard it, I mean, part of it's correct because now, like you were saying, marketing plays such a big role, but that also gives the opportunity for people who are really expert marketers to peddle some stuff that's not backed by actual data, strong assets. And that's what I think has happened a lot and why it's confusing for investors who want to invest in syndication funds and things that are managed by other people. Like a lot of stuff looks good. All you have to do is go on AI and say, hey, build me a 20-page PDF that shows how good this investment is. You're going to get something that looks pretty awesome.
Yeah. No, that's exactly right. It's, I think the internet in a whole has made it more accessible for people to find investors and to get their deals out there and things like that. So everybody's a fundraiser now. You know what I mean? Everybody.
Certainly everybody is a real estate investor. You can just go on Bigger Pockets and find that out.
Exactly. And it used to, I remember like my first week in the business, I went to one of those weekend, like one of those Saturday morning seminars. It was at a hotel in Conshohocken around here. And the guy was like NLP to the max. He was clicking and doing all this stuff. He was good. He was smooth as anything.
Yeah.
And when that day was over, man, everybody ran to the back of the room and was buying the stuff. And I'm like, I gotta go to the bathroom.
Yeah.
But it was just he was really good at it, and it's one of those things where you can go to that and then you can flip houses. You learn a system and a process. And nowadays there's a lot of capital raising courses out there and a lot of seminars you can go to for that. And you find a syndicator or an operator who's in need of money. You set up a fund, or you raise money for them, that kind of thing. And the internet's, I don't know how legal all that is, a lot of the times, but I think the internet's made it where people can set up like an investment company kind of thing and go out and raise money. And to your point, I think a lot of times when I see really good marketing, I'm not one to knock success. I think as Americans, we tend to knock success. Tom Brady's a perfect example, right? You win a lot, people start to hate your guts. And I try not to do that. You know what I mean? I want to be successful, right? I mean, I want to win a lot. So it's like, I don't want to get to that point. Everybody hates my guts. But so I try not to do it. But when I see really good marketing, I tend to get a little worried. Yeah? I tend to look at that even better because the best real estate investors I know, especially locally in the Philly areas, and spending time on like the commercial brokerage side of the business and all, and getting to know, some serious owners in the Philly area, they don't even have LinkedIns. They were around before, that existed and all. Marketing and all that means absolutely nothing to them. You know what I mean? So it's part of executing properly, depending on what you're doing, your strategy, and when you started your company and all that kind of stuff. So I'd never knock anybody for being really good at it, but it's one of those things that a lot of times really good marketing and kind of shameless self-promotion and really good execution are two very different skill sets. You know what I mean?
I really like those points because I feel like in this day and age, you can come across some people and say maybe we're at like a capital raising, thing where there's a lot of strong raisers there. Two people are standing next to each other and one says to the other, like, hey, do you have a ghostwriter on LinkedIn? And the other one says, what's LinkedIn? You want to go with the guy who says, what's LinkedIn? Because he's busy doing millionaire next door activities, which means, he just does his thing, doesn't care. And I always describe it as the person at your first real estate meetup who you think is the busboy probably has 45 units. Because people who have always invested, and I learned this from my dad because he was an investor. I grew up literally going to properties, dumps all over, and my dad would show up everywhere in tennis shorts and a tank top. And everyone's like, oh, cool, who's your babysitter? I'm like, nope, no, that's my dad. So I really feel like these are some things that people need to work out on their own. It doesn't mean that great raisers also can't be great marketers. Hopefully they just pay for a good marketing company. But again, like we've been saying, it's pretty easy to make good marketing. It's not easy to find good assets and good deals that actually work. So you have to be reliant on yourself to learn a little bit more in the advanced part. So you're not just relying on somebody's sales pitch who's going to get you with the NLP and those snaps and the the mirroring and the shaking the head, and you're like, oh man, this guy really likes me. And then 2 weeks later, you never even heard your name again. There's no class.
Once the check clears, you'd never hear from him ever again. Yeah, you're 100%. Right. It's just something to look out for, in the business. And there's people out there where you see them on Facebook or social media all the time, and you just think, when the hell are you doing deals? But it could be that they have a ghostwriter. It could just be that they have, it's not really necessarily them. But I often question that. There's some people where it's just like, you seem to spend a lot of time in forums, like when are you actually doing deals, or when are you underwriting stuff or analyzing
It's stuff? Funny though, because I spent years in the forums of Bigger Pockets just answering questions because I thought it was helpful. And, it's the same thing as a podcast. It's like, I'm making money off this. This is just fun. Real estate is fun. But at some point, other people want to turn it into money, and they're going to be looking at a lot of shiny objects. So like you were saying in the beginning, like sometimes the shiniest objects are what attract people. But again, it might not even be an object that's out there. Some of it is just kind of doing the hard work yourself. So if you go back on your journey and you're thinking when you were younger, when was the first time that you thought real estate was going to be a part of your future?
Wow, that's a fantastic question. I grew up in somewhat of a real estate household in the sense that my father was a property manager, facilities manager for CBRE, a couple different firms, but he was with CB for a long time, and then he left and was at a couple other firms, and then was back and retired with them a few years ago. And he managed everything from office to industrial parks, retail. When he retired, he was managing a portfolio of Bank of America's. So growing up, I remember, driving around to properties with him. I remember some of like the vacant office buildings and things like that. There, yeah. He'd have a meeting or something, and I'd be sitting in like a cubicle room or something like that, playing with on my phone or something like that.
Oh, see, I did it. I didn't have a phone, so you were lucky. I just had like a handheld bleep beep video game. It's a football game of just bleeps like that. Yeah, sorry. Go ahead. Yeah.
I never had one of those. I was jealous growing up. The kids had, I think it was some Nintendo thing or something. We had Game Boys and stuff like that. But then they came out with ones that were like more advanced, and my mom wasn't into that. My mom was a teacher, so she was real strict.
Take away this brain buster here.
Had to read. She made it not fun for me, because it's like I had to do so much reading before, like for a half an hour of it. It's just like, it's not.
Well, so maybe it was better to go out and see some trash properties though with your dad, because at least to let you sit there on your phone.
Yeah,
while
exactly.
you're
Yeah,
waiting.
literally. So that was kind of my first introduction. And to be honest with you, Jonathan, it was like, I don't think this is for me. The other thing too was like, anytime it was like bad weather, storm, and, we're in the Philadelphia area, so we get all 4 seasons, so we're getting snow, we're getting rain.
Sometimes in just a couple days. Yeah.
Literally, right? Exactly. So, and it snowed more back when I was little than it does today.
For
You
sure.
know what I mean? So it just, he was always it'd be like 2:00 in the morning. I'd hear him up in the other room on the phone and stuff like that. So I just thought, I don't think this is for me necessarily. So I went to Temple for media business and entrepreneurship. You know what I mean? So I thought I was going to be in the TV world and the radio world, that kind of stuff. So that's why I love doing podcasts.
Yeah.
It gives me something back to those days. But then I entered, after that, I got the job at PPR, which I really didn't know what the heck that was. I knew it was like sales and marketing, and it was advertised as a real estate investment company, which distressed mortgages kind of is. It's backed by real estate, but it's really kind of like a debt collection company at the end of the day. I mean, in those days it was, because it was second mortgages more than anything, which is, you're typically not taking a property back, that kind of thing. And at that time, he had just started a group that was called Strategic Investor Alliance. And they brought through all kinds of different opportunities, you name it. They had oil and gas and gold and silver and precious metals and multifamily stuff, retirement living stuff, life settlements. I mean, you name it. So all these things came through. But as I kind of being right-hand man there for a while, as I really learned the business and I bought my first property at 24, I looked at things completely differently, and I saw that property management side of the business wasn't everything. There was this whole other aspect of investing and the construction side and the property management side. Like I said, I was looking at it as capital acquisitions, execution. So, I mean, I was pretty much hooked right away. You know what I mean? And I really didn't look back. And, that was, I thank my lucky stars I was in it as young as I was. And I've always tried to just not take that for granted and try to take advantage of being, because especially with raising money, there's so many people I talk to that are, older, they're in their 40s, 50s, 60s, 70s. And like, real estate's like completely new to them. You know what I mean? It's just we're introduced to it somehow. So I always felt like I was very, very fortunate, very lucky to get into that at such a young age. And so once I kind of hit the bug there, got bit, I never really looked back, and it's just been full steam ahead since.
Was that first property, was it a buy for yourself to live in, or did you buy an investment property?
So Dave was big on utilizing as many conventional mortgages as you could.
That's a shock coming from Dave.
I think you wrote a book on that.
Yeah.
So it didn't work out that way. I mean, I bought my first property FHA, so I lived in one unit, rented out the other.
Yeah. Typical house hack.
Yeah, exactly. I mean, it was out of pocket like $3,500 or something. Yeah, I mean, 3.5% down. The person before me lived there for a while. It fixed it up nicely and all, and had a tenant in there for a while. But I learned the business very quickly. The people upstairs, they broke up, and the boyfriend, went back home, and then it was just on her income, and there was some struggle there, and she got another job, and so I very quickly learned the business, and I ended up, my parents got in a car accident, so I moved back home and leased that out, and so I very quickly learned the business, and I learned too that that in order to be really successful in this business, you need to have some understanding of the construction side of the business.
Yeah.
You don't need to do everything and all. I mean, don't let it intimidate you. But to me, especially because PPR was evolving at that time too. I mean, they were like a second mortgage, like I said, like a workout kind of debt collection company in a sense. And they were transitioning into first mortgages, which a lot of those were vacant. It was more hard asset management.
Yeah.
So I started to see like, wow, they had to outsource certain things at that time too, on the construction side and property management side. And I thought, I need to get involved in the construction side of the business and get some experience there. So I was fortunate to meet my partner, Ron, who I'm partner with in GSP. And he's been in the construction business over going on 25 years now. And some of the guys on our crew have been with him for 15 plus years.
Yeah, that's
so
awesome.
He's started as a builder. So I've been able to really learn that side of the business, and and just kind of I've really tried to touch every aspect of it as much as possible. But fundraising's always been my core, what I like to do the most. And, it's a very important part of the business.
Yeah, I mean, if you're doing any type of value add on a major project, you really have to understand the construction if you're on the pitch part of the team, because that's what the questions are going to come as. I think the most invaluable friend that you can find at real estate meetups is a contractor.
Sure.
You don't have to use them, but you can find out how much everything costs. But I think a lot of people don't get this because they're sitting on their computers all day and they think that they're looking at properties. And you found quickly when you bought your first property, hopefully you looked at a few, you realize like, wow, each one of these is different. So every time I've been walking house since I was 2, so more than 50 years. Every time I go in a house, I basically learn something new. I'm like, oh, what the hell is that? Send a picture to my project manager. Like, I don't know what this is. I'm 50 years in the game. I don't know what some stuff is. And I think if you don't continuously get reps in whatever part of real estate investing you're in, you're going to lose a lot of ground on that because other people are, getting a look under the hood all the time. And that's where you find the best deals. You find something that you can use as leverage against the seller, however big the property is, or something that other people in the room don't know. Do you agree with that? And have you found that as you got more reps?
100%. So years ago, there's a local developer here, amazing reputation, has done some really amazing stuff. And I cold called them. I wanted to get some advice and some information, that kind of thing. And that was the piece of advice he gave me. It was you got to put the reps in.
Yeah.
And and that's it. It's just like you said, it's just so important because real estate is not the real estate side, the finance side, the acquisition side, the construction side. It's something that's not going to just a full understanding is going to come upon you overnight. You know what I mean? It takes time. You know what I mean? And to your point, it just got me thinking. Like my brother just bought a house, and we were putting some floors in for him and some carpet and stuff like that. And we put the carpet upstairs. And I come the next day, and I'm looking around, and I happen to be in the kitchen, and I look up, and there's holes in the ceiling. Like, what the hell are these holes in the ceiling? I call my buddy, our construction manager, and I said, there's freaking holes in the ceiling. Like, what is that? It's nail pops. You know what I mean? It's like the drywall screws or whatever. When they were hammering in the thing, popped out. Probably because the drywall wasn't put in as well as it should have been. So it was like that was new to me. I never, so to your point, it's like I feel like 10 years in, I learn something new every day. Yeah, I mean, that's what I love about this business. You know what I mean?
Me too. It's fun.
License at a commercial firm because I've always been on the residential side in the investing business. It's just to go to the meetings. You know what I mean? Just to be a part of what's happening locally from an office, industrial, retail perspective and all, just to get an idea for all the happenings and, how the market's affecting in those spaces differently than residential, how interest rates affect that market differently and supply and demand and all that kind of stuff. So and that goes back to what we were talking about before with the marketing thing. Sometimes there's people out there, and Trump's really good at this, where it's just like they're the smartest guy in the world. You know what I mean? They have all the answers. And especially in the real estate space, when I see those podcasts or videos, that always, I just think there's no way. You know what I mean? Like, it's just, that's not how this business is. I mean, you should be learning something new every day. If you're not, then you're doing something wrong. You know what I mean? You were talking because Dave wrote a book for Bigger Pockets, and I love all the Bigger Pockets books. But the thing is, some of them were written 8 years ago. So when you look at it, the framework for something works, but the actual process of how you would do it now isn't the same. It's most popular with the Burr book because Burr is great strategy, just can't do it with 7% mortgage rates. It just doesn't work the same way. And same thing with a lot of even the house flipping stuff. When costs go up, you can't really do it the same way. So you use the frameworks that are there and you can learn the frameworks, but you still have to always be figuring out like, hey, how's this working in the field now? Especially with large scale commercial, there's a lot of issues now. There's a lot of deals that come up, but I wouldn't even call them deals because they're not as good as they should be. They're getting a little bit better, I guess. But you can't take a break from looking at anything in your field for a year and think that you're going to be okay. I think you're going to be way, way behind. I 100% agree with you. I think that the business evolves, you know what I mean? And to go back to like for a piece of advice that you mentioned earlier about like if somebody's just getting started raising capital or something, how do they get the confidence, that kind of thing? A piece of it is if you're starting a new fund and people are going to ask you, why should I invest in you versus somebody like Dave? You know how many times I freaking heard that over?
You're like, okay, yeah, I guess that's out.
You know what I mean? Yeah. Why should I invest with you other than Dave? Well, here's the thing. A new business ideally is set up and built to thrive in the market and the conditions that's in today, but ideally too where it's going to be. You know what I mean? Because real estate, especially on the development side, when you're bringing new units to market and things like that, it's not just important. It really doesn't even matter whether it's good today.
Yeah.
It matters when you bring the unit to market. You know what I mean? Like that's what's really important. Older companies that have been around for a while, their staff, their systems, their processes and things like that, they were chances are built for something that was around a couple years ago. You know what I mean?
Yeah.
Like so when they were built. So now they can evolve. You know what I mean? But the thing is, when you get more staff and you get bigger, it's like steering the Titanic. You know what I mean? You're not as nimble. It makes it harder to do things and stuff like that. So that's always my question, you know, when you're investing in companies that have been around longer, 10-year, 15-year track record. I want to see how have they evolved as the business has evolved over the years, because I think that's extremely important. And then like same, my question for a new firm would be, how have you set yourself up to be successful in today's market, and where you foresee, with your philosophy and the way you think, or where the market's heading and all that kind of stuff. Now, one thing I like about what we do is, I say this all the time, workforce and affordable housing, I think, is somewhat insulated from a lot of the other happenings in the market.
I agree.
Because the supply and the demand is so much different. It's especially in the markets that we're in. But when it comes to affordable housing, nearly every single market, metropolitan, urban, suburban, rural, you name it, has a lack of affordable housing. So that insulates it, where it's just like we're constantly supply constrained, and that demand is really only growing, unfortunately in a lot of ways for the country, fortunately for investors in the space. It's just that demand's constantly getting larger and larger. So I think it isolates it to some degree from a lot of what's going on, especially on the single family side, because typically you're not going to be dealing with commercial loans and things like that, which are then, where's interest rates at and stuff. It certainly matters, but it's not as important because the loans, could be, we do portfolio loans that are 30-year fixed, 30-year AM, that kind of thing. But I think that's, I think you hit the nail on the head. It's the reps. I have my podcast where I bring people on, and there's people where I just feel like they've lost the passion. The passion's gone. You know what I mean? And to your point, this is a business that's constantly evolving. And there's other people I talk to where they don't read politics at all. You know what I mean? It's just like, unfortunately, you really have to. You know what I mean? Like, you have to keep up.
I think you have to keep up with everything, and you have to figure out which part of the news cycle is just there to create news, which is basically all of it.
Exactly.
But if you know the underlying data and you're paying attention, you can look at the headline and dig underneath it and say, okay, this is, obviously the headline's ridiculous, but this is what's underneath it. And I think that, that's important to try to figure out, what's real, what's not, and also that self-confidence.
I was going to say, that's an important tool for somebody who's raising capital and talking to investors, because a lot of times investors are consuming mainstream media.
Great point.
Of it. And it's like that data is being aggregated across the whole nation. So it's just like, different pockets, like in the Northeast where we're at, in the Mid-Atlantic, we still have supply constraints. Like we're still 40%, I think it is, in Pennsylvania and Maryland, less inventory than there was pre-COVID. I think upwards of 50, 60% less inventory in New Jersey than there was pre-COVID.
Sounds right. That's my state.
Well, and I'm sure you see, prices are still staying strong. Properties are still moving quickly. Rents are still appreciating. Whereas in the South, it's completely different, right? It's they have more of that boom and bust kind of thing, or where it stabilizes and kind of flattens a little bit and all. So you have to, real estate's local. So I think it's important that you absorb that information. But that's where I think having those relationships, like you said, like with your contractor at the meeting, like if you're a passive investor or you're active investor, in different markets and all, it's good to have those relationships and have those conversations, because it's like what people are actually experiencing is really what matters more than anything. You know what I mean? Like that's the real data at the end of the day. Not that you don't want to factor in what the charts and things like that say, but you got to realize where are they coming from and how are they aggregating that data and is it national and all that kind of stuff.
Yeah, and I think to one of your points, I think if you just look around and what's the most important thing as an investor, you need to have other friends who are investors. If you don't know any investors, you're not going to be good at it. I mean, if I want to be a race car racer, like race cars, I can't not know anybody who's ever driven a race car. I'll literally just crash. I mean, and that's what people do. They, I read a lot of blogs and I listened to bigger podcasts and I watched some YouTube. Great. That doesn't mean you need to know those people that we were talking about in the beginning who are in shorts, a ripped t-shirt and Crocs at a meetup, and they own 45 multifamilies. Some they hate, some they like, but they'll tell you the whole story of how to do it. Hey, it's Jonathan. I hope you're enjoying this episode with Peter Neill. On this brief interlude, I just wanted to remind you a good way to help the podcast. I don't really get into vanity metrics. I don't even really look at them that much. And I think that a strong audience is not necessarily a huge audience. So I'm very thankful for every listener. And the best thing that you can do is to share the podcast with a friend who you think would get the same benefits out of it that you do. That's my only ask. Let's get back to Peter. I wanted to go back on something that you said because we're talking about affordable housing. And to me, and I think in general, there's really two different definitions of affordable housing. There's affordable housing that's more affordable than the norm, which is what we're really lacking. And then there's government subsidized or enhanced affordable housing. Which one do you guys do more and why?
Yeah, so we call it, and this is a really important question, Jonathan. And I always say to people, you want to ask if somebody's talking about workforce affordable housing.
It's a big deal.
What their definition is,
yeah,
because exactly it can vary greatly. When we say affordable housing, we typically mean subsidized. And then we'll say workforce housing. So we'll say we invest
workforce. I want to make sure everybody else does though.
Yeah, you know what I mean. So, and that's the same. Like, it's a better way to say it. Maybe even is like middle income. You know what I mean. So it's low income, low to moderate income, and then middle income. And we look at affordable housing too, the way that HUD does. I mean, so HUD really does have a definition for affordable housing, and it's 30% of your gross rent gross monthly income going towards your housing costs. So not just your rent, but your entire housing costs. So really, we're trying to stay in that realm, whether it's being achieved through a subsidy or it's being achieved naturally through market rate.
Yeah.
I mean, I think that's very important, and that's where you can get into a lot of trouble if the market changes or something like that, and you got a lot of people who are paying 50-60% of their monthly income towards the rent, and there's a lot of people that do that. I always wonder, like, who the hell are these investors that are putting people in? They're like car dealers, you know what I mean? It's like, it doesn't matter, we'll get you in the loan today.
It's rented. Yeah.
Exactly. It's like, who's doing that? You know what I mean? Like, that's very irresponsible. And it's especially if you're using leverage. I mean, that's a very risky game to play.
Yeah, for sure.
But when you look at the data, it's like, I can't remember off the top of my head. I've used this in presentations before. If you Google it, you'll find it. It's like, I think over 50% of people are paying, they're like severely rent burdened. They're paying over 50%.
It's only going up right now.
Exactly. Yeah. It's insane. So how we look at it is like, typically, and we focus really more on market rate than ever now, more than ever. So we used to do a lot of subsidized, a lot of Section 8. We don't shy away from Section 8. We like it. If we can get, a lot of times they're paying market rate or above market rate in the rent. And they'll fund a lot of the good portion of what the rent is. In some cases, 100%. So that's nice. I mean, now the issue became for us is that, especially in Baltimore, where a lot of our Section 8 properties are, the city, the office is understaffed, I guess would be probably the best. I mean,
I don't think that's going to change. It's actually going in the other direction right now.
Literally, especially right now. I mean, so that's where it went from like 2 months, which, okay, we can live with 2 months to get a lease signed.
Yeah. It's
going to be a 2-year lease. It's guaranteed on, from the federal government, that kind of thing. And they're paying, all of it or damn close to it. What happened is that 2 months started extending out, longer and longer and longer. And then you're seeing a very robust market. Like one thing I always tell investors is we don't invest in areas where we have to use Section 8. And that's like kind of more of a war zone, I would say. I mean, there's areas where it's like you very much want a Section 8 tenant because you're going to be kind of scared. The credit scores you will see at that point, you didn't even know could go as low as they are or whatever.
Yeah.
I mean, so it's just like you don't necessarily want the Section 8. For us, we're investing in areas where we can get it, but we're not depending on it. We don't need to have it. I mean, so a lot of what we've done recently has been market. And two, there's time, it ebbs and flows. There's times when Section 8, is higher than market. There are times when it's not. And not that you can't submit, stuff and all, to try to readjust that and what it is. But that's probably just going to extend the how long it's going to take to get it done and all that kind of stuff. And the other thing, too, with Section 8 is, when you know the business as well as we do, and when you do full renovations, you don't really run into this problem. But a lot of like smaller investors will, where they go to lease something Section 8, they do an inspection and they come back with $10,000, $20,000 worth of work that needs to get done, that you could rent it on market and you wouldn't have to do any of that.
Right. It's like selling a flip to an FHA buyer when you know that you've left a bunch of, unpainted windowsills. Like,
exactly.
You know what's coming for you.
Yeah, exactly.
I think, the thing about Section 8 and subsidized housing is it gets a very bad name, similar to FHA loans, which you used on your first. People think like, oh, well, these are all disasters. It's not. Like, if you want to be good at Section 8, I just think you have to do it in volume. Like, there's a lot of people who watch a course, as we were saying again in the beginning, and they'll just do Section 8. Please don't start with Section 8 because you have to deal with the government entity and it's slow.
You have to be a professional landlord.
Exactly.
And you have to look at things in a professional manner. And
you need to be running a business right away because they're running a business and it's slow and you need to have everything dialed up, or you could get a long delay, as we were saying, if they come in and then they ding you on a list. Well, you were just trying to put somebody in. Now you're way, way further away.
Exactly. So it's one of those things. A lot of times I hear those stories. I see those things on Bigger Pockets where people, Section 8 and this and that. And it's just a lot of times when you actually dial down and you ask people questions about it, it's just like you didn't manage it well. You know what I mean? Like you didn't screen the tenants, you didn't manage it well. A lot of times I feel like it's user error more so than it is,
That's
like
one of my favorite terms, though, and I use it for a lot of masterminds and something that you talked about before, which is somebody gets good at something, then they're like, oh, well, now I can just make a class on this. Yeah, but it doesn't mean that you know how to teach what you do. You maybe did it and maybe they did a good job, but it doesn't mean everyone can replicate it, because most people step in and they have 0 on the hustle scale. They're like, I'd like to pay $20,000, but then I want everything done for me and I never want to look at it. Go invest in a syndication. I don't understand what the problem is. Don't buy a flipping class and then think it's passive. It's crazy.
Exactly. I mean, so it reminds me of the guy, the NLP, the clicking guy back in that conference. He had this story where I think he was on an airplane or something, and he's going to one of these events and he's working on his presentation and all. And the lady sitting next to him on the airplane says, excuse me, what do you do? It looks like you're in real estate. And he says, yeah, I do real estate and I do these courses and stuff. And she said, oh, I don't dabble in real estate. My husband, I think he was a CPA or something like that. So he was around it, he was real estate adjacent. He was seeing all these people making all this money. So he just says, I'm going to do it. And he gets screwed. You know what I mean? He gets a bad deal or two and, he gets totally screwed. And he says to her, well, what education did you guys do before you got into it? And it was like, oh, nothing. And he was like, now, I wouldn't go and just be a surgeon without going to medical school. You know what I mean? Like, why would you think you can do that? You know what I mean? And I think a lot of people think that. You know what I mean? Like, why would you go lease a property Section 8 without having any clue of how to operate it, how to deal with the tenants and that system and all that kind of stuff? So I think a lot of times, for some reason, real estate gets this rap and has this reputation where people think they can just do it, with it and not take it it's a business. I mean, you got to run it professionally, and especially if you're raising money. I mean, you're taking invested money and all that kind of stuff. I mean, you got a responsibility to run things professionally. I mean, if you're doing things in your own portfolio, do what you want, you know what I mean? But when you're doing it with other people's money and all, you need to be a professional landlord. You got to do things right. And you live and you learn too. You know what I mean? You're not going to get everything 100% right all the time, especially in the early days. This is a kind of business where we all know those people at the REIA meetings who've been going for 20 years and they haven't bought anything yet. Yeah. It's just like
next meeting.
Yeah, exactly. Next meeting.
one. Yeah,
I'm waiting for the market to change. You know what I mean, in their favor or something.
Yeah. But never missed a meeting. And very gregarious, like great participant. But please pull the trigger at some point. No, I
It's
mean,
a
I think
learn by doing business.
yeah, and I think these all go to making it a relationship business, and people are a little bit short-sighted. They have a lower attention span now, so they're thinking more
Sure.
TikTok instead of books on tape, Carlton Sheets, where you can learn stuff. See, I'm old, so I still like long-form content. I can watch a full masterclass, doesn't faze me. Listen to podcasts, I finish them all. I listen to audiobooks. Like, I'm not fazed, but I don't think people my kids' age are used to that. They're listening to podcasts, they get a ding on their phone. They're like, oh, look, Bobby messaged me. Now I'm off. I listened to 11 seconds. Is that good? I just heard the intro to Bigger Pockets. Have I learned anything? No, you haven't learned anything. Wait, I watched it, a 47-second TikTok. They said Section 8 is great. Let me go research Section 8. A YouTube video says it's also great. There's so much kind of echo chamber mentality out there. And look, that's how the algorithms work, by the way.
Sure.
So if you want to look at Section 8 stuff, you're going to get a lot of Section 8 stuff. And then it's going to keep telling you how great it is if that's what you keep clicking on. Next thing you know, you're going to think it's the holy grail. Yeah, then you're going to get your first one. And again, nothing against Section 8. It's the same as landlording generally. It's just a little bit different. But most people don't like landlording. It sucks.
Sure. Yeah. No, I completely agree with you. Man, I mean, and it's like I always say this all the time. You really have to know yourself. And I mean, like you got to be honest with yourself. And I through my podcast and all, I talk about that stuff where it's just like I call it living the accredited life. And that was kind of my experience back when I started. I mean, it goes back to your initial question.
Yeah.
Like, how did I know? I was going to do this or something. It was when I saw what other people were doing, like that was, I named it, I branded it in my mind that was, I'm going to live my accredited life. And the first, I kind of have created these stages to it over the years. And that first one is really like stabilizing, building a really strong foundation. And that starts with just knowing who you are and being honest with yourself. I think a lot of times people have certain hopes and dreams and things like that, but it doesn't necessarily align with their strengths and their weaknesses and what they enjoy doing and all that kind of stuff. So it's like, if you're going to the REIA meetings for 10 years and you haven't pulled the trigger, there's nothing, it's probably just, you're not doing what you should be doing. I mean, there's probably something else you could be doing that you'd find that passion about and all that kind of stuff. So I think it's really important that you start with kind of a life assessment, on what do you know, where you been, all that kind of stuff versus where you are today. And then, kind of future out, where do you want to be? And then start to make steps to make that happen. And to your point, I think to add to it, not only do we all have the algorithms have given us all ADHD or whichever one it is, ADD, but it's also, I think a lot of people are afraid to pick up a phone. And I think I get this stuff all the time. Like, and I try to, through our content, answer as many questions up front as I possibly can. I think that's an important part of capital raising. If you don't do that, you're going to find yourself saying the same thing over and over and over again.
Yeah.
So if you can put things in content, and then people will listen to it in their free time and when they can, and absorb it over time. Capital raising it's a time thing. You know what I mean? Not everybody's going to invest with you the first time they talk to you or something like that. You know what I mean? It takes time. I got people doing this for 10 years now. There's been people that I've heard from where it's like, I've been following you for 5 years. You know what I mean? Like, they'll literally forward me an email from that I sent them 5 years ago, like replying to that. And it's like, where was that at? Where did you, did you put it in a file or something? Like, that's wild. You know what I mean? So everybody has their own pace. You know what I mean? But I think one thing that a lot of people have gotten away from, old and young and everything in between, is a good conversation. You know what I mean? And getting on a phone. And I think it's really important in this business because there's only so much context that you can provide in writing before it's like, God, you've written like a dissertation. Like sometimes I find myself in emails where I look back, I'm like, wow, I could turn this into like an ebook. You know what I mean? It's like, God, I wrote so much, you know what I mean? But I'm just trying to provide the context, you know what I mean? Because like with real estate, there's what you're projecting and what your performance says and what all that kind of stuff, what you think's going to happen. But then there's reality. You know what I mean? And then there's all the factors that factor into whether it's going to be successful or not going to be successful, and the risk and how you're mitigating them and all that kind of stuff internally with the company and the team versus externally and all. So it's like, I think this is, to go back to the Blackstone guy, he had something right. I mean, it is a conversation business. I mean, I really do think I've had people invest over email over the years, and to each their own. I mean, everybody's got to do what they want to do. But me personally, I like to have a conversation, and I don't like surprises. You know what I mean? So
Yeah, me neither.
I feel like a phone call gives you the ability to get deeper in, and have that and talk about the context. And to your point too, like before we started this, to see where it goes. You know what I mean? It gives some flexibility to it too, because you never know how you're going to connect with somebody or build rapport, or, to what we were talking about before with like the having friends in the business and stuff like that. We do an open call every quarter with our investors, like a management review call. And there's investors on there from California, from Arizona, from Florida, from Philly, from all over the country. And they're investing in different things. So a lot of times people provide different context, different perspective that you would never think. You know what I mean? Because a lot, you just put the blinders on and you do what you do. So I just think that's super important. And not everybody wants to necessarily put themselves out that way and do all that. But I think I've never regretted it. You know what I mean? I always feel like when you go to the conferences, or you get on calls, or you go on webinars, usually, and that's just the kind of person I am. I can always, kind of reframe it in my head, you know what I mean, to get something out of it. But I always feel like, you have a good conversation with somebody, you can always find something you get out of it that makes your life better.
I think you're trying to back up what you think is true with what is true, especially if you've watched a lot of content. For me, I know I'm always going to be myself. So if someone's been watching my content for 2 years and then we hop on a Zoom, they're like, oh shit, you're actually the same. I'm like, I know. Why wouldn't I be? Because there's a lot of fake stuff out there. And I think you're looking for that. Content's great, because to me, content is to build trust, not to close deals, like you were saying. And then it's our job to close the deal or not close the deal because it's not a good fit. And I think that you, again, build trust that way by having the conversation and saying, I was on a call today and I had to say to somebody like, you know what? They were asking me for something. And I'm like, nah, not a good fit. Not a good fit for me. Sure. It's just easier to have that. At least you can have that transparent rate, and it's not always, sell. Everything's a sell. Let me just show you, and that's why it is tough, because those NLP guys, you actually can learn a lot, because NLP is real and you can take it and use it very well in business. It's just that you can't be only about the, persuasion and persuasion and all of the NLP things. You have to be the person there too. And that's why I think you want that connection. That's why conferences are great. You can put the face to the name quick. You can see them on stage. You can see them off stage. You can meet all the other people who are there with the same buy-in as you, which then I think you're going to be able to form more of a group that you can enjoy, instead of being in that one with the user errors. They are always in the same group. They're not paying attention. They're looking at their phone. You just paid $20,000 to look at your phone for 3 hours. Good luck, man.
Sure. Exactly. Well, I think you hit the nail on the head. And I think authenticity is key with raising capital. That's one thing we get a lot of positive reviews on, is like the way that we structure our meetings and our webinars and things like that. Because, and I've seen them before, where it's like some guys do it's all scripted. You know what I mean? Like the whole thing's scripted, and they're just reading from that. I've even been on sales calls where like the sales call is scripted and all. I mean, I get it. You know what I mean? Like, I believe me, I've been doing sales for 10 years. I mean, have some script,
learn the script and then become a
it.
human. That's
exactly.
That's what I used to tell my agents. It's like, no, sure, there's a script, but like when you use a script, invariably somebody says something and you react the wrong way because you're just going to the next question. Like, what? Mm-hmm. You're an idiot. They just told you that their parent died, and now you're going into, well, what do you want for your house? Have a little empathy. Like, pay attention to what they're saying. You have to go off script. But again, knowing the script is good, because that means the questions that you need to get across. But I completely agree.
You said this before, and I was dying to find a way to get back to it because I thought it was so important. And you gave me the lead in there. But knowing the business, you know what I mean? Like, if you're raising capital, what's going to give you confidence is if you know your business. And you don't have to know every little thing. You know what I mean? Like my partner Wade runs the note side of the business today. My partner Ron really does the construction side and runs that. And we do it together, and we do the acquisitions together and stuff like that, but so there's always things that like you don't necessarily are going to do every single day. You don't have to have all the answers. And a lot of times one of my, favorite lines is, I think I might know, because usually I probably have some idea, or I do know, but I don't want to give you wrong information. You know what I mean? Let me get back to you. I always think that's a good way to, not bullshit somebody. You know what I mean? Like, because we all know the Verizons of the world, or there's companies where you call them and you could call 10 times, talk to 10 different people and get 10 different answers.
Yeah.
I mean, it's just like
every time,
because they're just telling you what you want to hear. You know what I mean? Like, so don't be afraid to say you don't know, and don't like not be sure about something and just tell somebody something. You know what I mean? So I always, all the time. I mean, even 10 years in, people ask me shit where I'm like, honestly, I don't know. I've never heard that before. You know what I mean? Like,
but again, that's trust. You build trust by saying, let me get you a better answer. As you were saying, I
don't want to give you wrong
I might have it. I might have it, but I don't.
Usually I probably know. You know what I mean? But sometimes it's just like, if I tell you this now and I go back and I find out something different, I'm going to feel like an ass. You know what I mean? Like, and I don't like that. But I think it's important. You got to know the business well. You can always tell when you're making an investment, you're looking, at a company, you're doing due diligence, when you're talking to one of the partners versus like an IR guy, you know what I mean? Like, cause they just don't, you really got to know, you know what I mean? So I was fortunate back at PPR, like that was a boutique firm at that time. So in all the meetings, really, and then I was started off with the note sales and the courses and stuff like that. So I was really able to learn the actual, operations of the business and all that kind of stuff. So when people knew, I pretty much had, you know a lot of the answers. And I never say I know them all, but a lot of them. Yeah. And I thought that made me good at what I did. And I've taken that into what we do at GSP as well. Where I'm on site, I'm always underwriting and due diligence deals. And I focus more on like the land side and the development side of the business and those larger kind of opportunities and stuff like that. But you got to know your business. But at the same time, too, people will understand. You have a partnership for a reason.
Yeah, right.
There's a lot of different hats to wear. So don't feel like you have to know everything, but you should know a lot.
Yeah, I agree. Awesome. As we wrap this up, so tell us what GSP does, like what your main core assets that you're looking for. And then after that, tell us where to find you.
Yeah. So, so what we do is we manage funds that acquire workforce and affordable single family housing throughout the Mid-Atlantic. So we do a lot in Baltimore, Philadelphia, South Jersey, and we really specialize in blighted homes. So fully distressed property, something we can pick up at a very significant discount. We're vertically integrated, so we go in with our construction crews, redevelop the home, reposition it, lease it out, and then we're a long-term buy-and hold company. So everything we buy, we look to hold long-term. Sometimes we certainly sell, that kind of thing, but for the most part, when we buy something, we always want to say, can we hold this for forever, kind of a thing. So we manage a couple funds, we raise capital through accredited investors, and that cash is used to do the purchase and the acquisition. We put long-term financing in play. It's kind of like a big BRRRR strategy, and we're still making that work because we can buy at such a discounted price and
in bulk.
Exactly, and in bulk. Because that's the thing with single family. I think a lot of people, I like to say, like taking a commercial approach to single family because the scale is important, and a lot of times I feel like some of the stresses you hear about in the BP forums and things like that about single family is because people don't want to do what it takes to really nail that out. You know what I mean? Like we're running a construction company, we're running a property management company, we have the acquisitions process down and all that kind of stuff. Like that takes a lot. It takes a team to do it. So a lot of times, like when people say about multifamily, it's like, I think it is right for a lot of people, especially if you're going to be active. You know what I mean? It's like, that is right because single family is the same in the sense that you need that scale. You know what I mean? So, and that's, I think, where the fund gives people an opportunity to diversify right off the bat into a fund opportunity where you can have the professional management behind it. You can have the scale behind it, all that kind of stuff. So that's what we do. How people can find us at gsprei.com. And I'm on LinkedIn. I try to get pretty active on there. So Peter Neill, 2 L's, Neill.
Yeah. And what's your podcast called?
That's called the Accredited Investors Only podcast.
Awesome.
So, we've had a lot of amazing people on, and we're about 28 episodes in when we're recording this, and we've done a lot of episodes in the background coming out. So it's the goal there is trying to provide kind of a manual for accredited investors to get the most out of their accredited investor status.
Yeah.
Raising money for 10 years, I've seen a lot of people I think are doing it right. and a lot of people that don't know what the heck they're doing. So
Yes.
it's that's kind of the goal behind the brand behind that, Accredited Life, and the podcast, Accredited Investors Only, is to introduce people to a lot of different opportunities and operators and, you know, strategies and things like that. And then we also do some workshops and things like that on kind of the Accredited Life and the stages we touched upon earlier a little bit. So
awesome, man. Well, it's been a pleasure getting to know you. We're actually close by, so hopefully we'll meet up in real life at one point off this internet that we call. But I appreciate you spending the time with us.
Jonathan, I appreciate you having me. It's been a great conversation.
Yeah, man. Loved it. All right. That was Peter Neill. He's the co-founder and partner of GSP REI. As he said, you can find them at gsprei.com. I'm Jonathan Green. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on episode 256 of Zen and the Art of Real Estate Investing. And it's Owen Barrett of Shine. This is an interesting episode. It's not something that we've covered in detail before. Shine is a company that looks to maximize net operating income with on-site solar. It's a turnkey solar solution designed specifically for the multifamily industry, and this episode will tell you how Owen got there through his own experience and how it can help. We'll see you next episode with Owen.